Okay friends, this is 21st of May 2024 and I was trading Indian stock market. The stock name is Granules India, and in the previous day we see that price has already swept this sell side liquidity here and then moving upwards. So for us, this candle is updated up to the last day, that means Saturday candle, and for us these relative equal highs are the target drawn liquidity here. And then if price conveniently clears this and then again shows some further intention to go upward, then the next drawn liquidity is this fair value gap or inefficiency that needs to be rebalanced now. So therefore the first drawn liquidity is this line and the next drawn liquidity is the starting of this fair value gap. So having that in mind, we were trading today. So before that we just observed that price has actually cleared this sell side liquidity here, these two equal lows in the previous day. That means not Saturday, this is a Saturday range. We don't actually consider this because this is unusual trading days. So I am talking about the Friday range. So therefore it clears here and then moves upward. So then therefore this becomes a dealing range for us. So when this is a dealing range, so we would like to see the 50% of this range to be traded. So therefore the 50% is 403.85, and below this 50% we have this 15-minute. This is 15-minute chart, so this is a 15-minute fair value gap. So we would like to see that this 15-minute fair value gap should be traded, and then from where we will take the trade up to the next drawn liquidity, which we have already identified. So let me draw that once again here in this Dhan chart. So this is our drawn liquidity. Okay, so having that in mind, we were trading today in the morning. So this is the chart of today. So first of all, we see that price is moving downwards, tapping into this 15-minute fair value gap that it created earlier, and then this is a high, although this is an equal high, but anyway this is a high which created this low, and now this is traded through this high is broken. So therefore this becomes our market structure shift here. So we will trade from this order block. This is a good order block because it is already inside this fair value gap, and so we actually entered from the middle of this range, somewhere around here. You can see this. So from here, keeping our stop loss below this low and our target up to this. So this is a 1.5:1 trade. So as we can see here, price actually moved in our direction, but actually failed to clear this drawn liquidity, and since we were trailing our stop loss, so I trailed it up to this fair value gap when price reached here. So since we were trailing our stop loss, we were actually saved. Not I think now it is going towards the stop loss here, so we didn't have to encounter loss here. Actually, when price is that close to your drawn liquidity or target, then it is very painful to take losses after that. So it is always better to trail the stop loss, either it make it break even or keep it in some logical discount area. So I did that, and actually what you can see here is I didn't have to encounter the loss. I ended up with little bit of profit. So but after that I was just thinking that why should this happen? Why didn't it hit the drawn liquidity here? So therefore, if you just analyze deeply, the structure is like this: high, low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, and like that. Therefore it is a completely bearish structure. So when it is a completely bearish structure, the highs, these highs are always protected and the lows are traded through. For example, this is traded, this is traded, this is also traded, then this is also traded. So there is no need to assume that price will reach some of these highs. It may not reach, even if we had a equal high here. So without looking the entire broader picture, we were just focusing on this much. So it seemed to us that it will trade through these two equal highs, relatively equal highs. So we missed the holistic scenario, the entire historical range of the price, which was actually downward trending. So this was one mistake I would admit here. So maybe this is the reason price actually did not trade through this high, although you can see that this high was already traded here. As you can see here, this was a high, this was already traded here. So what I am saying here is just being a devil's advocate, just to see why such thing is happening. This is one explanation only. Maybe it is just a random thing. So that's it. That is my analysis on this stock. So now I am inside two other stocks. The trade is actually running. So let us see what happens. Whatever be the result, I will communicate this using separate videos. But until this, thank you very much for listening.